Hello, everyone. This is Martin, and welcome back to another weekly update on what I see could happen for the week of September the 26th to the 30th. And we are in the first week of fall here in Toronto, Canada. The weather's dropped quite a bit, as well as the trading opportunities. Last week was kind of a bit of an odd week in the sense that we had three major news events coming out from Japan, the FOMC from the Fed, that's the U.S., and also from the Bank of Australia. So they all involved interest rate decisions, possibly having a change to the interest rates, and all three basically ended up being neutral. In other words, no real change, and that caused a little bit of a stir in the markets. But we're back to the choppy conditions that we experienced before the news of last week, and I expect that to continue again this week. So let's take a look to see at our first currency pair, and as always, that's the Euro USD. Okay, here we are looking at the Euro USD daily chart, and take a look to see what happened first of all last week. This vertical line here shows you the close on the previous Friday with this huge black bearish candle right there. And so we have the days after that. So all of last week, you can see price kind of went sideways and then finally bounced off the 200 SMA, which is this red dashed line, and went higher. And now price stands at just above the 21 moving average. That's the 21 EMA. Price seems to be wedged in between this triangle. You can see the upper trend line here in the green, the lower trend line in the red here. So this is a triangle, and price seems to be going sideways. So I expect this week price to perhaps go just a bit higher. But the key thing is to watch for this level. Look at the swing high here. Look at the green the green upper trend line here. So once price comes to about this area and meets up with the previous swing high, we can expect either one of two things. One, for price to break through and continue higher up to this resistance area that's shown in the gray rectangle, or for price to bounce down lower again to this lower trend line and perhaps keep going sideways until something happens. So basically, we're looking at sideways market, but we're looking for a breakout either to the upside or to the downside. Take a look at the MACD down below. You can see the MACD is pretty well close to the zero level. The histo bars are almost non-existent, which shows that we're in a sideways market. Okay. Okay, here we see the British Pound USD daily chart, and all of last week you can see the 1, 2, 3, basically 4 days we went sideways, not much happening, and then all of a sudden on the Friday we had a huge bearish move. You can see that with this black candle right here, and I expect price to go down in the short term lower. You can see that this area right here is a major swing point. It's a major level of support. And just to show you what that is, we're looking at an area 12800, 12850. That this whole area is a major level of support. In the short term, I do expect price to continue going down just a wee bit. We're going to test this level of support, and then this is a wait and see situation. Will price come down lower? Then with see this red arrow, will price bounce up and go higher again to again continue this huge sideways channel, or will price finally break below this support area in gray and come down to the come down much further? You can see the MACD, the histo bars are below zero, but again, it's a wait and see situation. So in the short term, I expect price to go down lower. Will price bounce up higher off the support again, or will price break through? You will have to wait and see. Okay. Taking a look at the LEOD, you can see here there is room for price to go down lower. And again, previous swing low is right there. So There's not much room to the downside, about 80 pips or so. But I do expect in the short term price to actually go down lower. Now we get to the Australian USD. Okay, you can see here this is the Australian USD daily chart. And last week, you can see we had a huge upward movement last week. This is again, this red line here, this red vertical line depicts the close on a previous Friday with this black bearish candle. You can see price bounced right off the 100 SMA, that's this blue dash line, and then continued going up higher. On Wednesday, we had a huge bullish candle. That's you can see that with my mouse right there, and that was based on the interest rate non-decision that came out of um, the Royal Bank of Australia, and they had decided just to keep things steady without making any changes. So we had a huge move up based on that. Price then went up a little bit higher. Now price on Friday, you can see with this black bearish candle came down a bit. So this did not come down much lower. It did not break the low of the previous candle. I expect price in the short term to go higher to again retest this top trend line. You can see that right here. So there's still some room to the upside. And what you could do is place a pending buy stop order above this level right there. I've drawn it with the red line, okay? And that means that's the 0.7650 area. So placing a buy stop above the 76, somewhere above the 7650, maybe 5 pips above that, and if price breaks up through to the upside, we can see price to continue going higher. Okay, so that's one thing you could do. Or you can wait for price to again come down lower to retest this support of the moving averages, which is often the case in a retracement. In a retracement, price often comes back down to moving averages. Then you can look for a bounce up to the upside again. Okay, once price breaks up through here, though, here is another area. See the previous swing high here. So either price will break out to the upside or again bounce to the downside. Again, contained within this triangle. You can see the triangle, the lower trend line in green here, the upper trend line in red. So this is a huge triangle. So we're basically going sideways. This pair has shown a lot of volatility. It is going sideways, but it's sideways with a lot of volatility. So big up moves, big down moves, big up moves, big down moves, and so on and so forth. Okay, so I can see in the short term, though, price should be going higher. Again, you can see on the LEOD chart, price did break out on the Wednesday. Price went up a bit, came down a bit. So I do see a continuation of this price to the upside. Okay, and also the Australian dollar is bolstered by the price in gold. You can see gold here. This is the gold chart. Gold has been going up higher, and as gold and other commodities go higher, the Australian dollar obviously piggybacks off that and is supported by the commodities. So that's why the Australian dollar is going higher. Now we get to the New Zealand USD. You can see last week, Thursday and Friday, we had huge down days. We broke a longer term trend line. You can see that in green here. And it looks like prices come down, and again, it's retesting the 50 moving average, which is the blue here. There's also consolidation, I'm sorry, confluence area of this gray rectangle. So we have the gray support area, we have the blue 50, and if price breaks down further, it could come down all the way to this next support zone here in the gray rectangle, as well as the blue dash line. You can see that's the 100 moving average. So this is the key area to watch. Will price come down a little bit lower, then bounce up? You can see that with the red arrow. I'm showing that, or will price go to the downside? This definitely is a wait and see situation. Okay, now you may want to look at this chart. This is the LEOD chart, and you can see we had a breakout. But again, you can see prices come down to this major support area right here. So I kind of almost think that price is going to perhaps, well, again, we just don't know. It's an if and then. If price bounces higher, then you can take buy trade. If price bounces goes through and breaks the support zone, you might want to wait for a retest up to the support, which would be now new resistance. Then take a sell trade to the downside. So again, this is the area to watch. Okay. Okay, everyone, now we come to the US CAD pair, and you can see last week price did come pretty close and actually did reach and tested the 200 SMA, which is this red dashed line. I also had an area of confluence and resistance zone here in the gray rectangle. You can see that right here. So price did bounce lower off of that. Would have been a great entry there. You would have made some pretty good pips if you would have taken a sell trade after the bounce. And right now, prices come back down to this area. You notice that prices come. It actually tested the 100 moving average, bounced higher. So sellers did bring it down. Buyers brought it up. So price is still above the 50, which is the blue line. And then price on Friday bounced up much higher with a lot of volume above the 50, above the 21. And in the short term, I see price going and retesting again this major resistance area. Remember, this resistance area is not only an important area of resistance, but also it has the 200 moving average, which is a major line of defense. And so at this area, you will want to watch to see what happens. If price breaks higher, price could definitely go all the way up to this area. And I'm just going to bring my crosshair tool in there. So we're looking at the 13400, 13450 area. So price breaks that. So it could go a lot higher. And that again depends on the oil. Because remember, the Canadian dollar is pegged to oil, and oil seems to be going down. We will look at that chart in just a second. So if the price of oil keeps dropping, then obviously this pair is going to go higher. This is the next area of resistance right there. Or if price right here with this big white candle on Friday just goes up to retest the resistance, and it may bounce right back down again, come back down to the moving averages, which will be another small retracement, then bounce off this. And then price could bounce off the trend line and come back higher and then break out on another attempt. So this is really important. Now, I did say if price breaks out through the resistance here, I did take a look at this area, and I'll tell you how I came up with that. You can see on this huge move up, I'm going to call this price is. Let's just designate this with the letter A. Here's the letter B. So from low to high, A to B, the swing low to high. This is a retracement. This actually retraced down to the 61% fib um, ratio level. And if price breaks up higher through here, um, this leg up higher, this bounce from here all the way higher, this price movement would be almost equal to this price movement right here. Let's take the crosshair tool. So from swing low to swing high, we're looking at about 430 pips. And then we're going to take a look from here, swing low to swing high, about 430 pips. You can take a look at that. That's the middle numbers, okay? And that is called an A, B, C, D continuation swing high. Okay, so we've got this pattern from A to B. We're going to name this C, and then in the future this will be a D, and then most likely price will come back to lower again. So this will happen only if price breaks out past the resistance here as well as the 200. It may not do it right away. It may go up, retest it, come back down a bit, come back down, go sideways, and then maybe at another attempt later in the week, may break up through and start to go higher. Okay, and it won't go all the way up right away. It may go up higher and then come back down to retest this area of resistance, which would be future support, right? When price goes up, is breaking out through resistance, but when price comes down, it will be now new support, okay? And then up again. So that's what I see there. And now you can see the oil. This is the daily chart. No, it's not the daily. Hang on, let me switch that. There we go. You can see on Friday, huge downward move on oil. And that's obviously the US Canadian pair is correlated to the price of oil. The US Swiss franc is our next pair to take a look at. Okay, you can see last week here with this the close of the previous Friday of last week. And this is what happened last week. Price went up just a little bit higher, and you see this red dash line. That's the 200 moving average. Price just bounced off of that, and then finally came down and broke through the 50, the 21, and from there. And by the way, that is a great trading opportunity right there. Getting in right there, it would have made you some pretty good pips. And all of a sudden, prices bounced up again. This is a very weak kind of a pin bar, weak attempt by the bulls to bring price higher again. The sellers are still in control. Okay, just want you to know that sellers are still in control, and I do expect price to either go higher or lower. Uh, I believe price could go lower first, and then we could wait and see what happens at this trend line. Price will either bounce up higher. Again, you see, I've depicted that with the red arrow, or price is going to break through. If price breaks through, it's going to come back down to this long-term support, which is shown as a trend line here. So this long-term support goes back quite a ways. So we can see, again, you're waiting and anticipating. If price comes back lower, bounces higher, then you want to be ready for a counter trend counter trend buy trade, okay? Because right now we're in a downtrend based on these two big candles, and sellers are still in control. Prices below the 21, prices below the 100, prices below the 200. So definitely we're in a sell territory, and the only problem with this pair is that it just continues to go sideways without giving us any real clues. You can see when I say sideways, up, down, up, down, up, down, and possibly down, up again. So we're contained in this triangle right now, and it's wait and see. I've drawn in these two arrows to give you further areas at an area here, an area of support that you could look at to see what's going to happen next. Then you can base your trading decisions on what you see and what could possibly happen. Take a look at the MACD below. The MACD line here indicating the red is pretty flat. It's really close to zero. It's been flat all the way from beginning of September. You can see here it's been pretty flat. The histo bars are pretty low, almost non-existent. So we are in a sideways market. So again, if you're not sure what to do and you don't want to trade this pair, that's fine. It's just stay away from this pair. And then finally, that's the LOD chart. Again, nothing happening there. You can see contained within the triangle. Finally, we're at the US Japanese pair. Okay, here's the US Japanese pair, and this is the daily chart, and I do want to move this over. Okay, so again, this red vertical line shows you the close on the previous Friday. It closed with a small black bearish candle. From then last week, price went sideways, and finally on the Wednesday with the news, the FOMC rate decision that came out of the Fed from the U.S. price went down, and now it is testing this support zone that I've shown in the gray rectangle. So from here, prices bounced up. The sellers are still in control with this huge bearish candle. Bulls are trying to push it up, but these candles are fairly small. So sellers in control. It broke this trend line you can see right here on with the Friday's move, and either we can expect price to go higher to retest the moving averages and the trend line. Okay, remember price is below the 21, below the 50. Okay, so we're in sell territory right now, and price could go just a bit higher to retest this the moving averages, and then we could look at price to come back down again. Okay, so and retest the previous support, or if price breaks out through this previous support here, it's going to go down lower. Okay, and this is an area that you want to watch. If price comes down, you want to watch this. Will price break lower, or will price bounce off of here and go higher again? Or if price goes higher, we want to see a bounce down. Once you see a bounce down with one black bearish candle, then I would take a sell trade. Okay. Right now you can see the MACD, it's curling down below the zero, and the histo bars are getting a little bit stronger. So momentum to the downside side is increasing. Okay, so the MACD red line is just slightly below zero, and the histo bars are increasing. Okay, so I do basically see further movement to the downside, but again, it's wait and see. And on the short term, price may go up higher and then down. Okay, so that's it for the trading opportunities, what we're looking at for this coming week. Hopefully this helps you guys. If you need any help, please feel free to email me anytime. And happy trading. We will talk to you again very soon. Bye for now.